Toronto real estate listings remain high as sales stall, and sellers are just twirling their thumbs waiting around right now. The buyers are on vacation, and this is the type of market that we're kind of in right now. They're just not moving it. It's not budging. Giant stalemate. So I'm going to be giving you the good, the bad, and the ugly on this month's Market Watch update as the numbers just came out. Now, as Torontonians are on vacation in August, the market, like I was saying, like just is on pause, right? And everyone is essentially preparing for, what's to come in the fall market. Especially it's going to happen right before the first Q3 Bank of Canada rate cut, which is I think like September 5th or 6th, something like that, right? So if you want to chat about your real estate needs and plans for the upcoming fall market, you can do so by booking a call with me using the link that's on the screen. It's right here. It's www.chatwithzen.com. Simply click on the date and a time that works best for you. And then when you see the prompt, fill in your name, email, mobile phone number, and the question you have for me, and then we'll chat then. Good day, Toronto. Welcome to another episode of Prime Properties TV. My name is Zen, and if you're enjoying the content I'm putting out there, do me a favor and like and subscribe. So we got the good, the bad, and the ugly. And I'm going to break down all of this with the latest numbers for you in this fashion. But, of course, because we're in the world of YouTube negative news sells, I'm going to start with the ugly. So here you can see are the stats for the latest month that came up. So essentially all of July. Do you see that number over there right beside month of inventory? Yeah, I'm gonna point it out. That 4.429 number may not mean much to you unless you've been following a lot of my content or like you eat, sleep, and dream real estate like I do, almost kind of to an obsessive kind of behavior. But that 4.429 is very, very significant because it represents the highest months of inventory that we've ever seen since the Toronto Real Estate Board amalgamated the stats in the early or like mid 1990s, where I started calculating all of Greater Toronto area, which means it changed all the numbers because it included all the surrounding suburbs. So in English, it basically means that we have to get back to the mid 90s to see inventory this high and how slow sales are happening, which at that time was pretty bad. And, I'll use the R word and put it out there, recessionary. And just for the record, the higher the number, the worse off it is. So this is why I'm going to put in layman's term, right? Which is just that stuff ain't selling in GTA right now. Of course, there are the exceptions because clearly, 5,300 properties, give or so, has exchanged hands in the month of July. But that is still very, very, very low, as you'll see a little bit later in this video. Then there is the bad. So this chart over here essentially represents the active listings. And as a refresher, active listings is how much stuff that's available to buy at the end of the month. And you can see over here, yeah, we're pretty high. We're cresting right around 25,000, which is not a great number to be at. And for some context of this number, the amount of inventory that we were kind of seeing when the market was bonkers and crazy in the first quarter of 2022 is right here, which is around 5,000. Yeah. So right now we're 4 times plus that. Yeah. And finally, the good. You can see over here, listings are starting to level off now, right? Meaning that we're not going to get that surge in pent-up sellers anymore. And although this could be some seasonality, in speaking with my stagers and photographers in the current kind of setting right now, it doesn't seem that their pipeline is too busy right now in August, which means it doesn't sound like there's a lot of people preparing their properties to go on the market in the fall. Which, again, in layman's term means that, yes, we're still going to get listings in September, but we're not going to get that abundance of listing that we saw last year in 2023, which kind of pushed us over the brink. So that's a good thing. But that doesn't mean the bottom is in, right? We clearly have to clear out the current inventory that's around 23,000 right now because it's very high for prices to start moving in the direction everyone wants to if they're holding real estate. And as you can see in this chart over here, the month of inventory, or the speed at which listings are being bought, like I was saying in the beginning of the video, remains relatively high. We're higher than last year, and last year was also very slow. And even if we get that slowdown in new listings, if sales, right, like people buying properties, they don't buy properties and sales don't happen, the market will stay the way it is right now and stagnate. Essentially, because it's a ratio, we need the sales to outpace the new listings for the month of inventory to come down, which means that we're going to need the buyer sentiment to shift. We're going to need more buyers to come back to the market with these rate cuts in order to absorb the inventory faster than the rate of normal supply coming online in the fall, because people are still going to sell. It's just, are there enough buyers to absorb that existing fall inventory plus the new ones? Because you can see in this chart over here, sales are super anemic, right? Granted, right now, we're slightly better than 2022 and 2023. It's not good enough to absorb the 23,000 active listings we have in the market. And that's kind of what I'm trying to get at. So there you have it. The good, the bad, and the ugly. It's kind of a nice way to summarize what's happening in the market right now. And, things are just going to stall in August. We'll see what happens in September, right? Now, my last thing I want to address before I get into the historical comparisons, and I've been talking about this for the last week or two, right? It's the Toronto condo market. So this snapshot of it will tell you all, which is here the months of inventory specifically for the 416 condo space. And you can see it's bad. It's really bad, right? Worse than last year, way worse than the average. But you can see, again, it's starting to level off. The question that a lot of people are thinking is, will rate cuts bring back the first-time buyers, right? And honestly, TBD. But investors will need to come back as well to absorb this inventory. And even with 3 potential rate cuts, it's not going to move the needle, at least by my math. So I do think there's a merit to buying a condo right now if you can get the right price and you can find that person who's selling for 80 cents on the dollar. We're kind of at peak fear, and some sellers are capitulating, and I am seeing some pretty good deals out there. And we had 1 or 2 clients pick up some pretty good deals. Now, obviously, this only applies to you if you're a condo investor who understands the fact that we're going to have an inherent supply shortage in 5 to 6 years, and you're not planning to flip this, right? We're not building enough right now because we're not selling enough. And that housing shortage in the condo space is going to come to roost in 5, 6 years. So if you can buy a condo right now for less than the replacement cost, that obviously makes sense. But you have to understand what I just said about this thesis. And if you do want to chat about this thesis, you can do so by booking a call with me using the link that's on the screen right here. It's www.chatwithzen.com. Now, finally, let's have a look at the historical comparisons. Here you can see our active listings are through the roof. It's a huge outlier, even from the last 2 years where July was very slow. So this was 2022 after a 1% interest rate cut, and 2023. So for sales, we're also very low. And just like I was saying earlier, slightly better than 2022 and slightly better than 2023. As for new listings, the velocity has slowed down towards the end of the month, but obviously towards the beginning of the month, there's still some. So we still ended on a high note. So that's why I'm saying hey, it's a good sign, but it's not indicative that the bottom is in. And here you have the months of inventory. You can see why I said this was ugly. It's ridiculously high. And the only reason it isn't higher is because there's actually some demand in the freehold space. If we're just looking at say the condos, because that's kind of where a little bit of the weakness is, oh man, it was a totally different story. And finally, the sales to new listing ratio, or SNLR, meaning how many of the new listings are essentially being absorbed right now and being bought. We're at 33%, meaning 1 in 3 new listings, not counting the stuff that's existing, is actually selling. This is the lowest ever in July. And historically speaking, this is top 5 lowest in all historical data. It's bad, right? So there you have it. The good, the bad, and the ugly in the world of Toronto real estate. And I hope this update kind of gives you a little bit of, information advantage on kind of what's happening out there so you can plan for the future. And if you do want to chat about your unique situation and what you plan to do in the upcoming fall market in September 2024, after the rate announcement, which looks like it's going to be a cut, you can do so by booking a call with me using the link that's on the screen. It's www.chatwithzen.com. Until next time, your move, your future. See ya! Now that you're done watching this one, how about this one? Or this one? You know what? Just watch them both.